Weekly update of the New York softs markets. I'm Rich Potts for Critical Point. This is for sugar, coffee, cocoa, cotton, and it is June 12th, and I have almost 9 a.m. Eastern Time. Okay, we're looking at the weekly sugar continuous prompt spot chart. Indicators are looking quite bullish. Price is really not behaving bullish. The model's saying, we got modest demand here, and that's about it. It is time to look for a level 2 top. That's the second most important kind of top during a year, but it is important enough to assume there can be fundamental development, important news. There can actually be real microeconomics going on, not just very short-term trading. All right, the top may not show up until the start of July, but we're looking for a top now to the end of this month and hopefully narrow it down and catch it for you. Moving forward, a down week, you should assume the model has probably triggered a level 2 top and is at least gambling on the idea that it ought to work lower into around sometime July to early August. I would say just July for this contract. Now, we don't know how much downside yet. In theory, we're in a long-term bear market, and I won't bother with the monthly charts and the long-term stuff this time around, but I think it's too soon for a long-term bear market ending, a bottom, and too soon to think about bullishness. I think even if it was starting a long-term bull market, it's going to be a long time to really look like an impressive bull run. So I'd be concerned that there are lower prices coming still, but not necessarily with this next level 2. It may stall out. It may do some kind of base trading here, but I think this is turning into more of a very short-term trader's market for a while, that it might be rather limited to the downside, but the upside is limited as well. There's still maybe something worthwhile to trade in these level 2, level 1s, however, but I think it's reduced for the moment. I think it's quiet. Now, at the same time, this weekly indicator, my favorite indicator, looks good. Other indicators are kind of on board with an upside, but not much so much. But that actually suggests lingering near-term upside momentum next 1 to 3 weeks. Well, the model is allowing that. Miles saying this is just the first time to look for a top in the sugar market, okay? Okay, so next one we want to consider is the coffee market. Now, the coffee market, in my opinion, has gone high enough, but the model's warning it may have another surge into a level 2 top. I think it's topped early. I think it's gone as high as it's going, but the model's saying it really hasn't met the type of conditions to get that aggressive. I don't like it. I'm afraid the model's running slow here, running behind. I think this market wants to go lower in a level 1 bottom, and the model is saying, overall, yeah, it should go lower in a level 1 bottom sometime July, August, okay? So at any rate, I think it's over for sugar. That's my personal opinion, a little bit of subjective piled on top of the objective, quantitative, qualitative, business cycles, the modeling, and everything else. I'm just saying the model is saying, I kind of topped a little early and I should have. All right. I can see a level 3 rebound by next week or so, and then that would meet minimum requirements, and the model would probably be ready to be more bearish on it. And it doesn't have to go higher than last week's high for that level 2 top. That's another thing I'm concerned of. I think it's pretty much over. I think this market's moving lower into a level 1 bottom. Cocoa market, it is due to rally into a level 3 top next week, and that also ought to place a level 2 top the earliest. It could go several weeks yet, spill over into early July for that level 2, then pull back for level 2. I think this could be range bound for a very long time. I don't think this bear market is going to work all that well for a long time. But I think it's over for the bulls, okay? But I think it's just going to take a long time to get past all this big price increase. And I must say, at the store, I don't really see the price increase, but I fall asleep at this stuff even though I'm buying groceries every week, and I do help buy the groceries, so I do monitor prices. So I don't know if there's going to be greater cash impact at the store moving higher and higher for months to come while the futures go lower, and that's typical, really. But this could go on for quite some time, and it could cause rebounds of the futures over time, as though the industry gets used to these kind of high prices until we truly see not only a future of higher supplies, but actually have higher supplies and then see the future for still higher prices, then I think we try to find a better rebalanced price that I think is lower to much lower than this. I think we're looking at the highest price for the rest of this decade, by the way. All right. Next, what we want to do is go to the cotton market. And the cotton market, really a poor performer, ugly, seeing cracks in other commodities like this that really they don't deserve to go this low price, and neither does cotton. But it's just the way they want to trade it. They're getting away with it. Nobody's stepping in. And that is the level 2 top, no question about it. Now what we have to ask, is this a gigantic level 1, and then we get a summer rally? This is not looking good for us for a big run-up. And I was a little concerned cotton wouldn't really have a crop problem like maybe for the grains on a cyclical basis, a cyclical crop problem. So I've never been that bullish in the sense of a crop problem, yet price-wise, we had the opportunity. It could happen and could be quite bullish. And as of this morning, it doesn't look like it's going to be bullish at all this year. But I'll give it a chance here, and we could have some hurricane damage a little later because that ocean is so incredibly hot. There ought to be a greater number of hurricanes and larger hurricanes, and if there for some reason a small number of them, I bet they'll be even larger, even more severe. I'm guessing sometime August on into November, I think we're probably going to see the Gulf Coast get hit, and Florida and some of the southeast coast there, and we'll see what happens there on the cotton side. Right at the moment, this is a bit perplexing for me. I think this is going into a level 1 bottom, even though it was here. If I'm wrong on that, a level 2 bottom was in here, here, and what that means is it's going still lower over the next 2 to 5 weeks for another level 2, and then we got to question the number of months, at least on a very basic, simplistic business cycle perspective, time cycle perspective, whether or not that can be a late level 1, because if not, then this thing may not bottom to August, September, okay? Very, very disappointing in terms of the minor long-term business cycle. But I should have spoke more of this over the recent years here. When you get your decade cyclical bull market that we had from 2020 to 2022 in commodities, okay, it's very easy to have minor long-term bull markets be a dud, not work. They only work 70 to 80% of the time. So 20 or 30% does not work. This may be a real problem here for us in some of these commodities this summer because we're due for some of these crop markets have big bull moves. The rest of the commodities really aren't so due. And now we just have to see what's going on. And in other words, this is a dud market, but if anybody's kind of still optimistic for a summer rally, I don't know why you wouldn't like this price. It seems to be oversold, undervalued. Indicators setting up inharmonious action here compared to this low. That could turn out to be a positive divergence, increasing the odds for a better, more quality type bottom. All right, not a whole lot going on here. If you ask me, most commodities are in a bear market. The grains ought to be a bull market into summer, and it's quite possible cotton can jump on board to that, but it's not looking like a bull market for the other 3 markets. Past results, not necessarily indicative future results. Have a great week. Thank you. And for those of you, I'm going to put this one up for free as well. For those of you, I'm using this to give you an insight what we're doing in the stock market and the other commodities and the bond markets that we put out a little more detail. I'm showing you the largest, most important trends during a year, and then some long-term stuff, most important moves during a decade, for a decade. But we also go more short-term, what's going on during a month, during a week, during a day for some of these other markets. Now, we also give signals in those other markets. Really don't give out alerts or signals in this, okay? So we actually help you making decisions. Quantitatively, what I'm saying is what's the most important move per decade? What's the most important move every few years during a decade? What's the most important move during a year, during a month, during a week? We're looking at that, but it's actually repetitive business cycles, so it occurs again and again and again, and it taps into the real supply and demand that sometimes does not go along with the news, the fundamentals, doesn't even go along with the numbers of supply and demand. There's other types of supply and demand called available demand, supply demand, that can just go off and do its own thing. And there's also people, especially in commodities, and for that matter, even stock market, they're always doing business. It's like they have to buy something frequently and sell it frequently. Sometimes those are the largest drivers, and that's why it doesn't have to match the news. They're going to do the business anyways. And today, there's far, far more money being traded technically, chart-wise. It's more and more computerized. If you ask me, most of the money in these markets today is traded on that side, and the fundamentals are actually just background information or looking for special situations. But in the end, these big fund managers simply say the fundamentals are bullish, and they go to their trading desk and say, you can trade it any way you want, super fast, super slow, you can do multiple time frames, multiple strategies, but I want you to have an overall bullish bias or you're fired. Past results are not necessarily indicative of future results. Thank you.